Top of the morning to ya. Just wanted to say that here from Gentian. We're coming to today from Dublin, Ireland. And I just wanted to say, hello. Here's our team. We're all sitting around. We had our morning coffee. We all had our Lucky Charms, the normal Irish breakfast. And today with that, I'd like to turn it over to housekeeping. I'd like to start with gratitude though first. First, I love the Irish for Irish beef stew. Love the Irish for potatoes. Love the Irish for their accent, for their fiery spirit, and for golf courses. That's what I'm grateful for today. And grateful for the fact that they got this little clover right here. It's a triunal that all leads to one, and is very spiritual to the Irish. At any rate, at this point, I'll turn it over to our host, giving us the real information.
Thank you, Chris. Appreciate that. I did not practice my Irish accent, so I will have to work on that for future broadcasts. So, hello, everybody. Thank you so much for joining us today. Happy St. Patrick's Day to everybody. I have a few housekeeping items to run through before the guys begin their part of the program. First up, this coming Friday, March 19th, Gentian is co-sponsoring an event with Gathering on the Green. The event is the stage live at the Mequon Public Market that goes from 6:30 to 8 p.m. There will be a musical performance by Eric Barbieri, if I'm pronouncing that correctly. Eric is considered one of the top vocalists in the area. So if you're not doing anything and you're looking for something to do this coming Friday, stop on by the Mequon Public Market, grab some good food, listen to some live music, and physical distancing, of course, but we hope to see you there. So again, that's this coming Friday, March 19th. Then our next Gentian bi-weekly update is in 2 weeks, March 31st at 11 a.m. So make sure that you register for that. I have a couple save the date items for upcoming events in April. Our Gentian Women's Group is getting back together on Wednesday, April 21st at 10 a.m. It's a little bit earlier than past gatherings, so make sure to mark your calendars, and the registration link will be in the April Bulletin. And then part 2 of our Health and Wealth webinar is on the calendar for Wednesday, April 28th at 11 a.m. This will again be focusing on nutrition. Michelle Norris is going to be joining us again, and this will be more of a question and answer type format. So if you do have any questions, feel free to forward those to any one of the Gentian team members, and we'll get that in the queue for Michelle. So again, that's Wednesday, April 28th. And both of those April events, again, will be in the April Bulletin where you can register for those. In case you missed it, the recording of March 3rd's bi-weekly update is now available on our website and YouTube, so check that out. It's a great place to catch up on other webinars and forums that we've had, so check that out. If you haven't already liked us on Facebook and LinkedIn, please do so. It's a great way to stay connected with what's happening at Gentian and any announcements that we may have. And finally, if you are due for your second quarter review appointment, those are right around the bend. And so you will be receiving an email from Calendly. That's our online scheduler. So watch for those. If you have any troubles with anything, feel free to reach out to Lisa, Angie, or myself, and we'll be able to help you walk through that. So that's all I have for today's housekeeping. So I will turn it back over to Chris. Have a great day, everybody.
Fabulous, Julie. That's awesome. I really appreciate it today. Thank you for your housekeeping, because we need that. We don't really know what's going on that often. Hey, Ken, I need you to unmute yourself real quick. I got to tell a joke.
Okay.
All right, this is a good one, Ken. I got to ask you a question. Precisely how many beans are there in an Irish bean stew?
I'm not sure, Chris. How many?
Precisely 239. You know why?
Why?
If there's one more, it'd be 240. That's a good one. That'll keep you doubling over. At any rate, it's very, very nice to have you all here. That's one of my daughter's favorite jokes. She loves to tell that one to all of her friends. And now that she's getting older, it's not quite so funny, but it's funnier to me. Anyway, I thought we'd give you some good jokes today. And Ken, why don't you share your gratitude?
Yeah, the gratitude is, I was going to wear some Irish stuff, but I have a green screen behind me. So anything I wear that is green actually shows up. You can see right through me. So that's why I'm not dressed up in the old Flannery stuff today. So, but anyways, grateful for the whole team, of course. But, recently you've heard of like Chris's Nutrition. Zach has actually jump-started me as well on running again. So thank you, Zach. Thanks for my gratitude goes out to you to get me off the couch a little more. And now we're up to 5 and 6 miles on the long runs already. So we're running the Lakefront Marathon later in October this year together. Zach and I are. Anyone is welcome to join. So if you are a marathoner or a runner out there or want to try something as far as an accomplishment, join us in October because it's a wonderful event. We'd be happy to run it with you. So it'll be fun.
Awesome. Thank you, Ken. How about Zach DeBoer?
Thank you, Chris. And I obviously missed the memo as well, and I am not trilingual like Chris as well, because I know he speaks fluent Spanish too, so I did not know he had this in his repertoire. It's pretty impressive. But for those of you that don't know, St. Patty's Day is an extremely special day for my family and I, not necessarily because of St. Patty's Day, but it's actually my dad's birthday. So you guys have heard many times how much I really care about, appreciate everything my parents have done for me. And today's an extremely special day. So my parents have made a ton of sacrifices for me. They motivate me all the time for what they've done. My mom being a pediatric nurse for 35 years now, and my dad working till he was the age of 70 to get me through school. So I'm grateful for them every single day, and especially today, and can't wait to celebrate with you guys this weekend.
Thank you very much, Zach. That's awesome. Well, we'll talk about another thing in Ireland. It's a Lucky Pickle. You know why Lucky Pickle's so proud? Because in Ireland, he's a big deal. Okay. Good to tell your kids these jokes because they're quite funny. Anyway, I think what's quite funny as well is the fact that I try to do this. I got most of my accent listening to David Faraday. He's a golf analyst and he's quite funny as we go. But one thing I want to say, it's nice out. We're starting to get out in and really get outside. So what do leprechauns do when they go outside? Where do they go? They go to their patio. Anyway, I'll continue on. So today we're going to talk about several things, and I'm not going to speak Irish the entire time, although it'd be kind of fun if I did, at least for me. I know you're getting sick of it. But the funny thing, if you see us looking all at the bottom of our screen, you're going to notice something a little bit different. You're going to notice that even though I'm speaking Irish, the captioning is on there. That's for those of you who say I speak too fast. You can actually read it at the bottom as well. And that's why everybody's smiling, because sometimes you'll see a caption and say a little something funny. At any rate, a couple of things we're going to talk about today as we go into our weekly webcast is today's about seeking wisdom. I love to define things like this. I always like to go to Webster and say, what is wisdom really about? Because wisdom is the quality or state of being wise. That's unhelpful. It's about knowledge of what is true or right, coupled with just judgment as to action, sagacity, discernment, or insight. Well, that's pretty helpful, but then there's 4 other words I had to look up as well. So basically, it's doing what most people don't do, and that is taking all the experience you've had and making decisions that really produce long-term great results often. Knowledge is about the short term. So people ask me, well, a wise decision typically has a great long-term outcome. We're not sure about the short term. Whereas knowledge is fleeting and can change at any point in time. Kind of what this leads me to believe too, as you look at wisdom and knowledge. Knowledge is really knowing, let's put it this way. Knowledge is knowing that tomato is a fruit. Wisdom is not putting that fruit, called a tomato, into fruit salad. It's the best way I can define it from my knowledge is horizontal, wisdom is vertical. It goes up and comes from a power greater than us, we often say. Knowledge leads us from the simple to the complex, which is what the world does oftentimes. Wisdom leads us from the complex to the simple. It's what we attempt to do. So I just wanted to open with a couple of those ideas because it's interesting when you take a look at what's happening in the world today. Everybody has their opinions. If it didn't go from this, it went to that. And there's still a lot of political unrest going back and forth. A lot of things are happening in the world, a lot of virus. People are getting their virus shots and vaccination, which is outstanding. We'll get 2 million people per day are getting those as well. We've actually seen a massive drop too in the infections and new infections, probably 6 times lower or so in the last 7 or 8 weeks, which is amazing. So it's good to see maybe we're moving toward some new normality, if you will, which is great. We're all excited about that. It was interesting too as well. I think they were talking recently to somebody who got over, I think they were very, very old, 104 years old, I think she was, and they asked her, what is it like being 104 years old and You know, what's most important about it? You're gonna think, oh, did you make it through COVID? Did you stay those? No, there's no peer pressure. And then she just smiled. Nobody at 104. There's no peer pressure. I thought it was quite funny. A couple of things we've been looking at too is the book report that I'm going to do on grit. The book Grit is from Angela Duckworth. Many of you have told us your stories of grit over time. You told us how you have come from a place where you had to work really, really hard, you felt yourself, and all of a sudden had some great success. Watching grit and instilling grit into our children is very, very difficult. Some of them may have it, some may not. It's something we also work out. Now, that's what Ken and Zach are doing too, in a lot of what they're doing with working on grit to stay training enough to make it through these marathons and these super long races. They're very inspiring when it comes to that as well. But as we go through it, we're going to start looking at a couple items that I got from that. And in the book, there's an interesting idea. You've seen a lot of people work on their productivity, right? They want to, got a whole list and got to get all this stuff done. What's really interesting, and this really struck me well, because I've got a whole list. My whole life has been doing lists of things I need to get done, whole papers of it. I check them off. And this was interesting to me. You want to get a lot done. You want to really work on getting a lot of things done. Then make it to don't list. That has helped me tremendously. I've had enough with to-do lists. There's a lot to do and it never ends, right? The to don't list will make you productive because it'll be all the things you shouldn't be doing to allow you to do what you should do. Like deleting Snapchat or Facebook or things that, cause your attention. I bring that up because it's the only social media that Zach actually uses. And he said he deleted it the other day and looked for it 8 times after he deleted it. That's how addictive it had become. I just wanted to share that, Zach. I hope that's all right with you. But look at the making it to don't list. I just wanted to give you that because that's kind of an interesting piece, I feel as well. So a couple things as well I think we can talk about here today is really talking about markets. So what I'm going to probably do is jump over to Zach, let him talk a little bit about markets. I got a little perspective on that as well. But let me go ahead and hop over to Zach. Why don't you give us some of the updates of what's going on today in the markets?
Yeah, thank you, Chris. I have a couple great updates for you guys regarding the markets, both year to date, also looking back 12 months to last March, and then a few timeless pieces that we always stress, like diversification and why it's so key. So starting out, we'll just talk about year to date as far as looking at some of the major indexes across the world in the United States and globally as well. So the Dow Jones, comprised of 30 stocks and price weighted, is up 7.25% on the year. The NASDAQ, which 49% of that index is based in technology, is up 4.53% on the year. The S&P 500 of the largest US companies for market cap and liquidity, is up 4.50% on the year. The Russell 2000, we talked about quite a bit over the last few webinars, tracks mid-cap and small-cap stocks, is up 17.45% year to date already, just 3.5 months in on the year. Emerging markets, 4.48% positive on the year. International, 4.97, almost 5% positive on the year. One thing we really wanted to look back on, it's hard to believe that 1 year ago today, we were in the midst of our first real quarantine, and the quarantine on that kind of magnitude. We just wanted to look back and what has the market done 12 months from today? If you remember, the market bottom last year was March 23rd. So this is right before the market bottom. Just look at a couple of these major indexes. And just as a reminder, the S&P 500 March 23rd of last year was down 33.2%. Okay, temporarily. The S&P 500 12 months from today is up 66.07%. The Russell 2000, again, tracking the mid cap and smaller cap companies, 123.59% since then. Emerging markets, 61.92, and international, 65.83. Really want to share those to you guys as an extremely well done for those of you that have trusted us and stuck to your plan, because we would have missed out on potentially 66% return or somewhere similar depending on the type of allocation that we have. So for those of you that made it through with us, congratulations to you. Amazing. The last item today is just why diversification is so key. And we could come up with something each time we talk about one of these webinars, why it is. But this time, if you remember, Q4 of 2020 was the best quarter for small and mid-cap companies since 1984. And that's when they started tracking it. So during that quarter, small cap growth really led the way. However, to start this year, small cap value is up 24.85% as of market close yesterday. Small cap growth, 7.94%. So a complete flip over 3 months of what has performed better within small cap and mid cap space. Just goes to show we don't know which one of those are going to do better when. So why try to guess? Why try to assume? Diversify between all of them. Another reason to diversify, if you guys remember, technology and healthcare really led the way last year, and industrials in some cases as well. Really this year it's been energy and financials have been the top performing sectors, and real estate, which lagged behind last year for most of the year, is up 7.50% on the year. So we never know when any of these things are going to happen. The unfortunate things, people see that technology did extremely well. Oh, I'm going to move everything out of here and move into there because it's doing well, and then just missed out on some of the best performing sectors or some of the best performing asset classes as well. So with that, I will turn it back over to Chris.
Thank you very much. I appreciate that. Zach, one interesting thing I had a client just recently ask me a question, because this happens often. I think people forget that when I got into the business, I wasn't getting into the predicting business. And like I've said, predicting things is very difficult, especially when it's about the future. So what's interesting about this, a client asked, so, hey, what's going to happen? What's going to happen? And I said, you know what, over the years, I used to try to answer that when I was younger, maybe less knowledgeable, had less wisdom. But today my answer is, and this comes from experience, but I'm not sure, but we're ready when it does. That's a very simple statement, but very important, just so you know who we are. And I think Zach stated it very, very well. Thank you, Zach. Now, there's a couple things as well. This comes from Brian Westbury in First Trust Advisors, but it's very interesting looking at initial jobless claims. We go year over year. We look at a ton of statistics, and we don't always tell you those, but if you look at it, last year, if you look at job levels, there was basically a decrease of 223% if you looked at change year over year in jobless claims. Here's what's interesting though, year over year change in box office receipts, that's going to movies, down 84%. Month over month, so if I go back from January to February, up 255%. That tells me that people are going back to movies. They're beginning to go back to theme parks. This data kind of shows also that the the hotel occupancy is down 25% from last year at this time. It's saying also that TSA checkpoint data is down 29% from a year ago this time, but month over month, TSA checkpoint data is up 40%. Also, restaurant, if you will, and hotel are up about 30% just in the last month alone for occupancy. So looking at a bunch of different pieces, even rail car traffic, that shows how much is being shipped back and forth. It's interesting. It's occurring quite a bit. I talked yesterday to somebody who's at a construction company, a big major construction company as well, and they said that they're seeing a lot of the answers, a lot of the big things that were going to be built that were being pushed off because they weren't sure. There's confidence again, and people are building them because they think that people are going to come back to work in buildings. So interesting to see. A few things we keep track of here, but that kind of goes along with Zach in the market. Let me turn it over to Ken though now. Let's take a look at the bigger picture planning. Ken, what's going on in the planning side of the equation?
Yeah, thank you, Chris. Very much appreciate it. Great to be here with everybody. Happy St. Patrick's Day, everybody. I'm going to talk about a few things. Actually, some of you have already sent pictures to me. Some of you retired, a few years ago, or you've been retired for a while. You've sent me pictures. You're actually drinking Guinness at 10 a.m. in the morning. So I just want to say thank you for those pictures. I do have to say I'm impressed by that. But with the last name of Flannery, 10 a.m., that's a little late from where we come from. So anyway, just wanted to reach out to you guys and say, hey, happy St. Patrick's Day. Hope you have a great time today. Hope you enjoy a Reuben sandwich as well later as well. So I'm going to talk about three things. The student loan forgiveness all over the news in the last couple of days. Stimulus checks are starting to hit your bank accounts if they haven't already. And also I'm going to talk about the contribution limits and timeline for 2020 contributions. We still have time, but we have to make sure we get in on time as well. So I'm going to start with a joke here, and I'm going to this is going to lead into the student loan forgiveness one. But why can't you borrow money from a leprechaun? Because they're always a little short. So that leads me into student loan forgiveness all over the news last couple of days. I wanted to bring something timely to you all. There's a lot of talk about, what kind of loans will be forgiven, how much, 10,000 up to 50,000. I've also seen pieces on free community college for everyone, free 4-year state-based colleges for families that are under $125,000 worth of income, deferral of student loan interest. It's all out there right now. It's all being talked about. So as we learn more about the actual details, if something becomes a law and it becomes a planning tool, if you will, I know it's a very controversial one, but if it's a planning tool, it's available, we will certainly know about it and help guide you however you want to be guided for that topic as well. So just wanted to give you that one.
Hey,
The
Ken,
stimulus,
while we're talking about student loans, real quick, I have a timely thing we stumbled across yesterday due to March Madness. So I'll share my screen real quick for you basketball fans out there that are chomping at the bit to fill out your bracket. No, this is not my winning bracket for this year. But if you look at this, if you can see your screen, this is actually every single college within March Madness and what it costs for a 4-year degree as of 2020 and 2021. When we first looked at this, it was pretty darn depressing. We looked at this and saw 200,000 numbers, 300,000, some of the smallest ones being 140,000 currently for a 4-year degree. We really looked at this. It was amazing to go through. And also that we tried to flip that and how can we turn this into a potential planning scenario as well. And one idea is if saving for college for kids or grandkids or potentially even great grandkids is a big priority for you guys and you really want to have that, is to work on it together. These are some absolutely massive numbers if you're trying to shoulder the burden as a parent, as a grandparent, as a great grandparent, but potentially working on this together can allow that for the future. So just wanted to share you guys, again, not the winning bracket, even though a potential strategy this year based off of my previous brackets could be just to pick the one with the highest enrollment, so highest tuition.
Yeah, absolutely, Zach. It's interesting to see Wisconsin on the list over on the top right up there, $220,000. Holy cow. That is a lot of money for 4 years of education. So yeah, those 529 plans that a lot of you set up, they really come into play to help fund some of that education there as well. Thank you, Zach. Appreciate that. The stimulus checks are hitting the bank accounts right now. I just want to let you guys know that they're not taxable to you. I've talked to a couple accountants about this. They're not taxable to you. So, and I've had a couple of questions. Should we withhold 15% or 20% from taxes? It's not a taxable event from you. If you didn't receive a stimulus check that you thought you should have, the only way to recoup that is to go back to your taxes. Some of the accountants we're working with is that's one technique that you can use, is actually talk about that on your taxes if you didn't receive a stimulus check that you thought you should have. So just wanted to make sure you guys are aware of that as well. Contribution limits. I'm going to pull up a chart here and maybe I can share my screen. Maybe not. We'll see. I'm having a hard time. I'm not sure what happened there, but for contribution limits, this is on the accumulation side. A lot of you are in the distribution phase, but for those of clients that we have that are accumulating money, this is really important for contributions limits. So you can go back for 2020 still up until April 15th of this year and go back and make a contribution for 2020 if you're eligible. There's income limits, there's income restrictions and thresholds for traditional IRAs, Roth IRAs, SEP IRAs as well if you're self-employed. Just know that you can go back. Typically for a Roth IRA or traditional IRA, you can contribute up to $6,000 if you're 50 and younger. If you're 50 and older, you can actually make a $7,000 contribution for 2020. So time is ticking on that one. We have about a month away before that happens. Also, health savings accounts. If you're eligible and have a high deductible plan through work for medical insurance, you can actually still contribute to your HSA, your health savings account, for 2020 up until April 15th of this year for last year. So also a great planning tool as well if you're looking for a few extra tax deductions. This also gives us a chance to take a look at 401ks for 2021. You know, now that you've seen maybe 2020 happen for you, maybe it's time to increase 401k deductions. Maybe it's time to increase traditional IRA contributions, Roth IRA contributions, and the like. So we're here for you. If you need help on determining what vehicle and what strategy is best for you and your plan, let us know. We'll be happy to help you out.
Awesome. Thank you, Mr. Flannery. Somehow I've gotten back into the Irish accent. I don't know how it happened, but it did. We had a question again to ask on bonds. So we had one of our questions, a live question, which I asked you to please ask. So Jim, looking at the 1-year treasury, it's negative 0.03 for the year. The 5-year treasury, negative 0.14. And for the 10-year treasury, it's negative 6.21%. The longer the duration, when interest rates goes up, the more you'll get hit. So again, it's why you might want to consider things that have a shorter duration or that have a rising interest rate hedge on them. So I'm not going to exactly tell you which, you know which they are in your portfolio, but I want to tell you that when interest rates go up, it's not necessarily good for bonds, especially when it gets out to the 5 and 10 year, and especially the 30 year. So historically, you'll see some big issues, big negative returns in the 30-year treasury when interest rates go up. Those are just for year to date as well. So thank you very much. I appreciate that. Zach looked that up while we were on the call, so I wanted to bring that piece up as well. So thank you very much. A couple of things. I want to do this in a little category called Keep Me Relevant. Keep Me Relevant. For those kind of uncool grandparents or parents like myself, I try to actually do things that keep me in tune with my daughters, who are 14 and 11 now. One's 5'8", the other one is 5'4". They're in 6th and 9th grade. We'll be sending you more on who I am. I'm Chris Doughty, just so you know, in case you didn't. We'll give you some history of who I am, just like we did everybody else from our team as well. But look at a few things like this to keep you relevant. Look at artists like Billie Eilish, Eilish. She just won 2 Grammys recently as well. And my youngest daughter enjoys her music. She's got some really, really good music. It's a different sound. Ariana Grande is a big one as well. You saw The Weeknd, and that's the name of the artist. It's not The Weekend like the end of the week. His name is The Weeknd, which is one that you're going to want to use and take a look at. So listen to some of these different musics. It may be a way for you to connect directly with some of the super young members of your family. Another thing they use oftentimes is Snapchat versus texting. The telephone, not so much. I ask my daughters to call people, but why would I do that? They want to text, they want to do Snapchat or something as well. So take a look. It's also causing some issues with overusage of Snapchat and other things, just like Facebook was. Facebook is for older people now, they think. But it's interesting to watch this. And when I look at the Keep Me Relevant side of the equation, we want to do a couple of different pieces like this to say, here's some things to take a look at to keep you in tune with them. I won't send you into the whirlwind of video games that they're playing because many of them are very violent and we probably would test them. But the second thing you could do is you could play some Xbox. You could look at some of the games. You could do some of the dance games with them as well. But these would be kind of fun things, and you may surprise the heck out of your grandchildren. Say, hey, let's go do Just Dance 2020. They go, what? They would love to do it with you, by the way, as well. So get yourself all limber, get ready to do that as well. So a couple things also I wanted to go through. One thing, this is interesting. I'm going to pull this up because I found this one fascinating. So if you can see this on my screen, can everybody see it? Zach or Ken? Shake your head. Yep. So this is called, let me tell you, this is called the Bumpy Road Ahead. This is from DFA. Dimensional Funds is one of the fund managers we use in the small cap value category, but they've got a different view on things, but they put together some great research. From 1926 to 2020, they took all the returns that there were every single year, and they're shown on these bars. The negatives are here in red, the positives are here in blue. And what's interesting is if you took this on average, the return was 10%. Pretty awesome for stocks over the time, right? That's this blue line right here. But what the blue line represents is 2% above 10% and 2% below 10%, and showing you that during this 95 years, only 6 times did the returns fall within the average. That's 2% band. 70 times, it was positive. 25 times, it was negative. The highest high was up 54%. The lowest low was down 43%. So looking at this, isn't that kind of interesting? People tell you, oh, stocks average 10%. That's totally different. Yesterday, one of my clients said, oh, my boys said when they were little, they were going to buy one house on one side of me, one house on the other to protect me. And I guess they kind of did that on average. One lives in New York, one lives in Los Angeles. On average, they live right next to me. Averages can be deceiving, but I thought I would share this. It's a great chart to show you the ride is bumpy, but being in it long-term can be rewarding if you got the proper behavior. So there's a bunch of charts like this we have, and when I get them, I want to do a quick recording and show you what I think of the charts. Hopefully that's helpful, just offering you some perspective as well as we go through. So I want to do one last thing here. It's also called, what is it? Have you heard of a SPAC? Anybody heard of a SPAC? A lot of conversation about SPACs lately. What is it? Used to be when I was young, IPO, initial public offering was the way to go. And companies did all this filing to go public, and they did, oh my gosh, that's incredible. They're going public. It's an IPO and we want shares, and it was hot, right? Everybody remembers that? Well, there's a new thing called a SPAC. It's a special purpose acquisition company. So S, special P, purpose A, acquisition C company. And a special purpose acquisition company is a company with no commercial operations at all. It's formed strictly to raise capital through an initial public offering for the purpose of acquiring an existing company. Let's just say I wanted to buy Panera and go take it private, or I can simply raise this money, buy a company. So I'm getting public money, buying a company and holding it in here. It's also known as a blank check companies. SPACs have been around for decades. This is not new, but they've gotten in recent years, like 2016, they came out of it. And really they've had a big, popular, attractive, big name following recently. And some of the underwriters and investors, they're raising a record amount of monies for IPO money in 2019 and 2020. I think at the beginning of August, more than 50 SPACs had been formed in the US, which have raised about $21.5 billion. So if you want to think of it just in a simple way, it's another way to go public with maybe not as much filing, just maybe a different way. And you're going to find that people are very smart. They're going to find ways. If it's very arduous to go public through the normal route, they might use a SPAC versus just going public on an exchange or through a broker like a Merrill Lynch or like a Raymond James. So it's interesting. You're going to hear more and more about it. Who knows? You might find these things get regulated away. Oh wait, I waited that 3 seconds because 3 tax laws changed. So what you look at is your changes happen very quickly. So at any rate, I wanted to go through that as well. We talked a bit about Bitcoin. A couple of the hot things people are talking about recently as well, and this has happened a couple of times, is end of life and estate planning. So remember, we have plan it, live it, and give it here at Gentian. So Gentian retirement is bodied by 3 different categories. The planet is all the technical, all the things we've done over the past 25 years, all the data, the crunching, the putting the numbers together, planning so that your retirement is successful in the numbers. The live it is actually going to be the quality of life, the behavior you have, the mental way you approach things as well. And the give it, and yesterday one of my clients said, Chris, maybe it's not give it, maybe it's leave it. I have to leave it to somebody. So this planning for the leave it or give it stage is the third. So looking at this, we understand that there's those 3 distinct phases, if you will. We've decided to put those 3 phases into what we call our retirement. So what you're seeing here today is a bit of all 3, the plan it, live it, and give it. What I wanted to talk about is this end of life planning and organization planning. If you have some interest in this, please let us know, because we've had 4 or 5 clients say that they're really interested. They got a lot of stuff. For instance, what are you going to do with your digital assets? Chris, what's a digital asset? You have 25,000 photos. And when you pass away, you're the only person who knows where they are on iCloud. What are you going to do with those? What happens with all the things that you've saved? The passwords. Doesn't anybody even know all your passwords? Do people know where your estate plan is? Is there an organizer that you can simply hand to somebody, your brother, sister, child, whoever is going to be your executor or executrix? Is there a place that they have? So these are some of the questions people have been coming up with. And as we were younger, we were planning for retirement. Now we're in the midst of retirement, we're living it with you, right? And now we're starting to reach some of these points where we're 80, 85, we only have another 20 or 25 years left. We're starting to look at, well, who are we going to give this to? So we'll begin to look more at that if that's important to you. That's what we want to do here. Again, we've got a limited amount of time total. We spend a lot of our time, almost all of our time, directly with you and what you want. We wanted to bring these up. So if this is something that resonates with you, you're going to see more of our future talk about some estate planning ideas, not from us to recommend, but maybe bigger picture ideas you might want to take a look at as well. So there's a couple things here, and this kind of reminds me of the future. I'll do this quick because it's my favorite portion, but it's a portion I tend to give most short shrift to. But looking at the future and the technology, this is crazy. The future technologies that are occurring right now, for instance, the AI Sophia the robot. She's the one that I met back in Abundance 360 2 or 3 years ago. She is to create the first ever human robot NFT digital artwork. So she's creating digital artwork that people are going to sell and buy and own that doesn't exist. It's only digital. And she's going to create it as a automated AI robot. Very, very interesting to see. The second thing, and this is, I thought was very cool, 3D printed plastic beams are stronger than steel. You want to talk about changing the way we literally make things and make up? They're now printing beams stronger than steel. How will that change construction? Graphene is also being able to be mined now. Mined, it's 10 times stronger than steel, 10 times more conductive, 10 times thinner and lighter. What will that do to metal objects? Another couple things too is they're talking heavily about somebody wants to build an ark on the moon to preserve species that are here on Earth now, like Noah. You're also finding as well a couple of the ideas that might reverse aging. They're finding artificial intelligence is now being able to map what Alzheimer's may be and starting to map out what artificial intelligence thinks might be a cure for it and how to prevent it. We've also recently found what makes us tired as we get a bit older. Brain cells and different things that cause us to have those kind of mental fog, and maybe you forget something. And they think that through those senescent cells, there's a way to eliminate those so that they don't infect the cells around them and return ourselves to the quick thinking maybe you had when you were in your 30s and 40s. There's more and more and more with that, but the technology that continues, and this is just coming out daily. This is 5 days a week we get this coming out. If you look at that, it definitely puts hope in there. Now, as with anything, this is Ken's favorite line, there's a fine line between good and bad. We understand that. Our goal is to discern that for you, or give you the data so you can discern it for yourself, but help you make smart decisions based on some of the things we know that are also coming that maybe other people don't pay attention to. So with that, I know we've gone a little bit over here, but I thought it was a couple of interesting things. If you want to talk about some wrong predictions. In 1962, Decca Recording Company rejected the Beatles. They said, quote, "We don't like their sound, and guitar music is on the way out." You've been more wrong. How about Ken Olsen from the digital chairman of Digital Electronics Company? There's no reason anyone would want a computer in their home. It's just crazy to look at some of these things. So anyhow, I want to leave you with some of those words. Those are quite funny, but more than anything, as we look at what it is we do on behalf of the team here at Gentian, planning it, living it, and giving it, that's our goal to help you. We've won some awards recently. That's fantastic. You win them. When I say we, I mean you won those awards. It's very funny this weekend. 5 of you or so emailed me, "Hey, congratulations. I had no idea what anybody's talking about." I emailed Peter, "Did anybody know about this?" And what's funny is I looked up 2020 Barron's Award, and Peter responded to me, "That's last year's," and then promptly sent me this year's. So obviously they knew about it, but it's just interesting how little we follow that. The only person we want to be number one, there's one single award we're looking for every year, one, and that is to be your number one advisor. That's what appeals to us. If we get that award, that's enough for us. The rest is just simply for confirmation for whoever needs it. But thank you guys tremendously. Really appreciate that. For the next week, please stay grateful. We appreciate that. I guess it's St. Patty's Day, so I guess today is stay sober as much as you can. Maybe have some Irish corned beef, if you will, and maybe celebrate with a couple of pints of Guinness. Enjoy. Have a great week.